I just built the best MACD scanner ever. And in today's video, we will not only talk through how to build and set this up, but also we will go over a strategy that I built utilizing the MACD study. The MACD indicator is the most popular among active traders because it does a very good job of visualizing the current momentum of a ticker. Just look at how well it performed today on the intraday chart of the S&P 500. It was a very choppy up and down day, although now getting a pretty harsh downturn. But just look at how well the MACD was able to, in real time, visualize those momentum shifts throughout the day. And this is not just like an idea that some dumb YouTuber came up with for clicks. There are some very detailed research papers written about the efficiency of the MACD indicator on active stock trading. Now, there are two main types of analysis that comes within the MACD study for determining momentum switch. The first and most obvious being when the moving average values cross, when the faster moving average crosses above the slower moving average, when the MACD histogram bars go from red to green. That is your first and your safest area for helping determine where you should enter a trade utilizing the MACD study. Now, the second and more aggressive yet more risky way is the first MACD candle to increase. So you can see here you have decreasing MACD histogram bars. That's why they're getting brighter red, brighter red, brighter red. This first darker red bar here, you may notice, will give you an earlier entrance than the previous way. However, you probably also are noting that that did in fact happen here as well. And in fact, that trade would have failed. So utilizing the MACD in this way, once again, can give you earlier and better entrances. However, will give you a lower win rate. And my favorite part of trading stocks is that there isn't a right answer there. There's not like, you should do this one or you should do that one. It all depends on your trading goals. Are you targeting a higher risk to reward ratio, or are you targeting a higher win percentage? Both of those can be correct, once again, based on your individual goals. So what I'm going to do in today's video is I'm going to build you a scanner that finds you both of those MACD setups, both the moving average cross and the first increasing histogram value. As we're about to jump into building some custom codes within ThinkorSwim, I need to let you know that if you are interested in this type of custom coding within the ThinkorSwim platform, I have published over 140 of my own scanners, studies, strategies, etc., all over on my website, daytradingstrategies.net, and they are all extremely easy to import into your own platform. Check out the website. It will be linked in the description down below this video. So the first scanner we're going to build is the crossover, the more conservative of the entrance types when using the MACD study. Now, I do have 3 stock filters turned on that will remain constant on both scanners, and pretty much most scanners you watch me build on this YouTube channel, I have on similar stock filters. It really just helps to filter out the trash, right? Like, stock filters are used to pick the types of stocks you want to trade before you actually build the custom chart setup filter part. So I have my last price set to a minimum of $5. Just don't show me any cheap penny stocks. Market cap set to a minimum of $50 million. Don't show me any building radar detectors out of their mother's garage type companies. And I have a volume set to a minimum of 1 million shares traded on the day. Just don't show me any really low volume stuff, as I have no interest in trying to actively trade those kind of stocks. Now, for the chart setup, we need to build a very simple equation in which this faster moving average line crosses above the slower moving average line. But how do we pull in those values into the equation? Luckily for us, ThinkorSwim gives us all of that information. Back within my edit studies modal here, I can click into the settings cog of the MACD study function. First off, this is the name of the function. Whatever the indicator is called, for example, if I were to add a simple moving average, the name is simple moving AVG. That is the name of the function in which this data is stored. So right from the get-go, you know the name of the study function you need to reference, and within it, I can see these plots down here. And I can see, of course, the cyan colored line being our faster moving average. I can see the name of that plot is value. That is the, for lack of a better term here, that is the value that I need to call into my equation. And clicking over, I can see that this second kind of beige colored line being our slower moving average is called AVG. So value in the MACD being the faster moving average, AVG within the MACD study being the slower moving average. Those are the two data points we need to reference within our equation to make only the stocks in which that cross is happening appear in our scan results. So to build our custom filter, which only scans for this chart setup, we are obviously going to add another filter. This time though, rather than a stock filter, we are going to add a study filter, and I'm going to click into the pencil icon of said filter and hop on over to the ThinkScript editor. So we know we need to reference two values within the MACD study function. To once again reference that MACD study function, the name of it is MACD. To let the machine know that we are referencing that function, we need to open and close parentheses. What that does is it sets all the parameters of the function to the default. And in this case, since we're not actually adjusting anything about the MACD study at all, meaning we are simply using it as it comes out of the box within ThinkorSwim, we don't need to make any edits within the parentheses here. Just use all the default parameters. Now what we need to do to reference both the value and the average of the MACD, those plots that we just talked about, we need to utilize dot notation. Since those plots occur within this study function, we reference that by going MACD dot, and at first faster cyan line was of value. So we have now pulled that information from the current bar. This code will run, every code within a active trading software like this runs and executes at the close of every bar. So we just pulled the value of the current bar, and we need to obviously also say that it is on this bar greater than the slower moving average line. To do that, we are going to use the comparative function of crosses above, and once again, we will reference the MACD study, open close parentheses, dot, and remember the name of that beige plot was average, or short for AVG. So now we have currently on the current bar, the MACD value, faster cyan colored line is crossing above the MACD average, beige, slower moving average line. One more thing to fix though, the time aggregation. By default, it is set to daily. I want to look at this at an intraday. What we were charting in our example was the 1 minute chart. So you simply click on this. All of the time aggregations that are available within ThinkorSwim, you can simply switch it to, so that of course your equation is occurring on the bars of that time aggregation. You can also decide whether you want to include extended hours or not. And this is very important because of course your MACD value will be different whether you are charting extended hours or you aren't. I was charting extended hours on the example that I showed, so I will leave this box checked. Go ahead and hit OK. Go ahead and hit scan. And now we only have 4 results. There are only 4 stocks in which this is happening right now. The first result is IAG. Let's go take a look at IAG. And in fact, if I move my big head out of the way, you can see that we just got the MACD faster moving average crossing above the MACD slower moving average. So that is your switch in momentum, right? You can see week, 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 bang, just now starting to get a bounce. So it appears on our scanner. So that is the scanner for our first momentum switch trade entrance setup, right? The MACD average lines crossing. Now, let's go ahead and build the scanner setup for our MACD histogram bar getting greater, or a little bit more aggressive entrance for momentum switching. Once again, we need to figure out what the name of this value is. So once again, within the MACD study, click into the settings cog, and you kind of just go through the plots until you find like the one that matches the colors. Obviously here, this diff is what we're looking for when it comes to these histogram bars. You can see the negative and down, negative and up, blah, blah, blah colors, which is all relative to the plots we are looking to pull the value from. So we know we need to look at MACD.diff within our next calculation to build out this equation. So back within our scan tab, let's go ahead once again and add in a study filter. And once again, come into the pencil icon and ThinkScript editor of said filter. So we actually need to check a couple of things in this equation, because it can't just be that the MACD.diff value is greater than the previous bar. It also needs to be that the MACD diff value is less than 0, because we're looking for momentum switches here, right? That's kind of the whole point of this scanner, is to find when a stock goes from weak to strong, so we can go ahead and look to possibly buy that dip, right? So what we're going to do, MACD, open, close parentheses, to reference the MACD study function, of course, dot diff, utilizing dot notation to pull in that dot diff value, is less than 0. Pretty simply, the horizontal, or not horizontal, the histogram bar values are red. Now we need to append onto that also the equation that the current diff value is greater than the previous diff value. To do that, we use the keyword and, simply meaning that both values on either side of this and must be true in order for the tickers to appear on the scan results. So now we're going to go with our equation of the MACD.diff value must be greater than, or actually let's go with crosses above, so that we are only return stocks in which it is happening on this bar. That is the difference in using crosses above and crosses below versus less than and greater than, right? So the MACD.diff crosses above the MACD.diff from the previous bar. To offset where you are pulling the data from like that in ThinkScript code, you simply open bracket, type in the number of bars back and to the left that you want to pull the value from. In this case, just one bar back, just the previous bar, obviously close brackets. So our MACD histogram bar charts are red, and the current bar is greater than the previous bar. Essentially, you're getting that change from the light red to the dark red. Of course, let's once again switch our time aggregation down to the 1 minute, include extended hours trading session. Okay, and let's run this scanner and let's see if we did it correctly, right? Obviously, scans are really nice because you get an immediate feedback on what you just built. The first stock on the list is SAND. We go and look at that. We can in fact see we have a red histogram with current greater than previous bar. So you're getting that early switch here. The other stock that was on the scanner was X. Once again, you can see red histogram. And since you got this little kind of pipe down here, the current bar is greater than the previous bar. This also kind of like the larger purpose here, like this one's not so pretty, but the larger purpose here is that that also would have been on the scanner on this bar here, right? This is kind of a nicer one that you want to see, sort of a down, 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 kind of multi-bar down and increasing. Then you get that flip would have happened on this bar here, and you got a nice little bounce out of it. You know, we're looking at a 1 minute chart, so whatever that is, 15, 20 cents, but still, momentum-wise, you got a nice little bounce out of it. Now, we are going to move into building this trade strategy. However, we're not quite done with the scanner yet. There's actually a very important next step we need to create within this custom scanner so that the stocks with the best setups are appearing at the top of our scan results. That just really won't make any sense until we talk about and build the strategy. So for once again, right now, we're going to build the strategy. Then towards the end of this video, hop back and build one more very important thing within the scanner. And we can talk through this strategy pretty fast because it's probably pretty obvious from the visual here what is going on. However, there is one secret to the strategy I'm about to cover, so don't think too fast. But the basic principle of it is once we get that more consecutive cross that we built the scanner for, meaning we get our histogram switch from red to green, we get that faster moving average crossing over the slower moving average, we buy the close of that candle, then we sell the first candle in which the histogram bar declines. So we sort of use both ideas, right? Like the more aggressive idea for entrance was the histogram bar decreasing, right? Well, instead we kind of flip that and we use that idea for our sort of more aggressive exit. Hey, as soon as this thing starts showing any kind of declining momentum, let's go ahead and get out of this trade. Now, the secret to the strategy is that we don't just blindly buy every single time that happens. You'll notice actually here today, we weren't like buying this cross. Like we didn't buy this cross, we didn't buy this cross, and we didn't buy this cross. And for good reason, that is because all of those crosses occurred below the 200 length simple moving average. If I go ahead and turn on that plot, you will see also to be true for the buy condition to trigger, the close must be above the 1 minute length or the 1 minute, 200 length simple moving average. Basically, you need to also be showing me macro strength in order for me to want to look to buy your dip. If you're just weak, like I'm not interested in attempting to buy this dip. I mean, look at all these crosses here that failed below the 200 simple moving average. You have one here on the MACD, you have one here, you have this one which worked out like a little but mostly failed. You have this one which worked out a little but mostly failed. Still, they just aren't bouncing as well as the ones that occur above the 200 length simple moving average. One of my favorite things about coding within ThinkorSwim is that the codes automatically adjust to anything you're charting. So it'll adjust across any ticker and it'll adjust across any time frame. So once again, right now you are looking at this strategy and the performance of said strategy on the 1 minute chart. I could pop this thing out to the daily time frame and you can see the performance here on the daily. It looks to work pretty good as well. So the MACD indicator is not only useful for day trading, but it seems like these sort of setups can also be useful for swing trading strategies. And of course, back within the scan tab, that same idea is true. If I wanted to look for my MACD crossovers on the daily time frame for swing trading rather than an intraday time frame, I could simply switch the time aggregation of my study filter out from 1 minute to daily, and here we are still running that more aggressive check, the first histogram bar to be greater than the previous, and we have a list of results here, the first being MP. If I go ahead and load up the MP daily chart, on the daily we do in fact have that crossover occurring. We had a decreasing MACD, now an increasing MACD on a nice strong day here. This brings me to the final thing I want to build to make this scanner actually much more useful. At the moment, we have the correct stocks appearing on the scanner. However, we're just sort of sorting them by default by the stocks that have traded the most volume on the day. Well, as I mentioned in that strategy, one of the very important rules for entrance is that the stock must be macro strong. The stock must be above the 200 length simple moving average. So what I want to do, I want to build a custom column for the scan results that shows me the percent difference from the current price away from the 200 simple moving average and sort ascending top down by that, so that the stocks that are the most macro strong, and actually MP will probably be close towards the top of the list still, as this stock is currently like 45% above its 200 simple moving average, but those stocks that are the most macro strong while also receiving this MACD cross are appearing at the top of my scan results, as those are the ones that are more likely, definitely not guaranteed. Nothing's guaranteed. Like a MACD cross does not guarantee a bounce, but the ones that are more macro strong have a higher likelihood of that strength continuing. So to build custom scan columns within ThinkorSwim, I'm going to click on this little cog to the far right of the header column names, and then click into customize. And from my lookup a column field here, I'm going to type in custom. You'll have a list of available custom options here. Really all that matters is you have this scroll icon with no lock on it. You can click into that scroll icon, and what it means is that you can view and edit the source code. So we are in fact going to edit, of course, our source code, and we are going to build the percent change equation. The percent change equation is pretty simple. It's new value minus original value, all divided by original value, then of course multiplied by 100 to make it a percent. So our new value is close. Close within ThinkorSwim also represents the current price, so we can simply use that, and we will subtract our original value, what we are looking for the difference against, being of course the simple moving average function with a length set equal to 200. I will then wrap this entire equation in parentheses so that the entire thing is divided by, once again, that original value of simple moving average length equals 200. Wrap this entire equation in parentheses and then multiply the entire thing by 100. Now, from here, of course, once again, depending on whether you are using this for a day trading or a swing trading scanner, you will need to adjust the time frame of this custom column. Once again, just like you do from within the study filter by clicking into this time aggregation, obviously choosing what you want. For now, let's go ahead and leave it on daily. Let's look at this from a swing trading perspective. Of course, double click on it so it actually runs within your current set. And if I built that correctly, we should now have a list of the percent change differences from the current price away from the simple moving average with a length set equal to 200. Sort ascending top down. You have a couple of not available here. What that tends to mean is that these tickers just haven't existed for 200 days yet. For example, let's go look at NMAX. Sorry, I was watching this. I don't know. I'm making this on April 14th. Hopefully you guys are trading this Webull IPO or special acquisition merger, whatever it is today, because this is going crazy. But anyway, let's go look at Newsmax just to give you an example. Newsmax just recently IPO'd less than 200 days ago, so it doesn't have a 200 simple moving average. That's all that not a number there means. So, of course, just go down to the first ones that have values. MP being the one we've already looked at, I told you would probably be towards the top of the list. Next, you have FNA. We go take a look at FNA. Okay, this one is simply a buyout, right? Whenever you see a stock that is gapped up and then trading straight sideways like this, it just means that they have buyout news and essentially they're waiting on that buyout to go through. So this isn't something you can really actively trade because there's no volatility in it, right? Everybody knows the value of the company now because they've been bought out, likely at 13, maybe like $14 a share, because sometimes it trades slightly below just because of that risk of the buyout failing. But everybody knows the value of the company now. That's why it trades so flat. So anyway, skipping over that, let's go down to the next one, HSAI. Here we go. We have a stock that is getting that. Once again, we are doing the more aggressive MACD scan here of decreasing and first sort of increasing MACD histogram bar. And this one is currently trading at $12.80, while its 200 simple moving average is all the way down at $9.48. Just a funny little tie-in here with the last conversation we just had. So I switched my scanner back to the more conservative MACD value line, crosses above the MACD average line. And of course, we're still sorting top down by that distance and closing price from the 200 length simple moving average. And the first stock on the scanner now is in fact Webull. And it's apparently 7,500% above its 200 length simple moving average. We go look at this thing, of course, just got the MACD cross yesterday. So actually true and on the scanner for good reason. And of course, at the top of the scanner, and of course, would have been at the top of your scanner all day because it's been blasting off. But the 200 length SMA is at 97 cents. Stock is currently trading at $75. I mean, we just once again just mentioned how insane this thing is, but hey, it's actually, funnily enough, on the MACD crossover scanner, and you would have been aware of it all day when using this custom column. And that's something else I just want to continue this conversation around. A custom column like this, like, yes, we just built it in today's video in reference to MACD crossovers, but you should be making use of a custom column like this really in any scan that you build within ThinkorSwim. Knowing the percent change difference in the current price from the 200 length simple moving average is always useful. That can always be a useful metric to sort top down by. And just continuing again, once again, something very important about columns in ThinkorSwim is that the information within them updates in real time. You'll probably notice that, especially this Webull, as it's jumping around so much, this value is live updating. So if like you were running this on any of your scanners and something started blasting off, like when Webull started blasting off this morning, it would have in real time jumped straight to the top of your scanner. So you wouldn't have missed that move at all. Just the power of custom column scans, custom columns in ThinkorSwim scanners. And once again, this code along with I have 10, 15 custom columns that I've published over on my website, daytradingstrategies.net. So once again, little shill if you're interested in something like that or just ThinkorSwim code in general. The website is linked in the description down below. And if you got a tax refund this year, meaning the government sent you money back after you filed your taxes, it means that you didn't have a fantastic year trading stocks, right? You didn't make enough so that your capital gains tax offset what you owed. So why not reinvest that free tax refund that you just got back into yourself so that next year you don't get a tax refund? Over on my website, I do have a course available that teaches you how to code within ThinkorSwim. It'll teach you from knowing nothing about either ThinkorSwim or coding in general, all the way down to being able to code exactly like I can with 5 years of experience in coding within this platform. There is also a link to this page in the description of this video down below. And one more really fun sort of extra add-on that you get when signing up for this course is you get access to a private Discord community. And in that Discord channel this morning, we were talking about the Webull move. I actually had no idea it was going public today until someone brought it up in this Discord channel. So just another sort of thing that you get access to when signing up for the course that can help make you a better trader. Please hit like if you learned something in this video. Make sure you subscribe to the channel by hitting the red subscribe button down below if you would like to continue learning. And with all that being said, I'm going to go ahead and sign out of this video, and I'll catch y'all in the next one.